Get right to the market panel and this midday decline in stocks. Keith Fitzgerald, Fitzgerald Group Principal, Bob Pisani joins us. Mike Santoli, let's begin with you on what may have sparked this big turnaround.
Well, it seems the headlines about Russia and, essentially going to close down the natural gas pipeline to Europe timed perfectly with, yes, it was this kind of mechanical rally from this morning, but the dollar surged right on that. It was very much the script was starting to run on the risk aversion. We don't know what's going to happen over the weekend. We're worried about Europe falling into recession as most expect right now. And it just seemed as if it was, hitting a market that was already a little bit fragile, both on the upside and the downside with these kind of illiquid air pockets. And, right now the S&P just a little bit above yesterday's lows from which it bounced intraday.
Bob Pisani, what are you hearing from traders?
Well, 60 to 70% of the people I normally talk to weren't in today. This is the last day before Labor Day, and half of the rest of them left right after the jobs report. So the jobs report was good. Unemployment ticking up a bit. The wages are a little bit softer than was expected, so it was an excellent report. I don't think anything that's happening here negates the fact that overall the inflation is peaking story got a little better today. However, look what's going on here. Very thin volumes. People aren't in. Mike's point is very well taken here. You've got a 3-day weekend where we've got China lockdowns going on. We've got a lot of problems over in Europe. We've got an offensive going on in Ukraine. We've got the pipeline being shut down. We don't really know. It would make a lot of sense to lighten up a little bit going into a 3-day weekend. So I'm not terribly concerned about this. I think that there's just an ongoing problem with buyers trying to get enthusiastic when they've got so many unknowns going into the month of September.
Keith, your reaction here. Bob says a lot of people want to lighten up. Can you help us lighten up?
Well, I can certainly lighten up the humor. We can't take ourselves too seriously on days like today. I mean, this is a classic rug pull for both points that Mike and Bob laid out. A lot of people literally walked off the floor to go to the beach, go to a holiday, whatever. But at the same time, you've got a market that has increasingly tried to get ahead of itself, which means that there is just all sorts of computerizations, hijinks, things going on today behind the scenes that have simply caused this reversal. I would caution people not to read into this. When in doubt, you want to zoom out. Stay focused on the big picture and the companies that are going to survive, because history shows very clearly beyond any shadow of a doubt, big down days like this on thin volume temporarily are good buying opportunities.
I have to say that your cautions are very memorable, very catchy, and the one that I have in front of me from you, Keith, is don't do stupid stuff. So today, in particular, what would you consider stupid?
Well, thank you for pointing that out. We try to speak in very plain English most of the time. Don't do stupid stuff is a mantra that we share with our clients. Today, qualification on stupid stuff would be a knee-jerk reaction, would be trying to run for shelter when in fact, the better play is to wade into companies maybe you've missed or take a different perspective, change up your tactics. It's making rash decisions that get you into trouble, particularly when this stuff hits the fan, because it's not evenly distributed.
Mike Santoli, let's talk about what we have today's jobs report, which was a pretty sweet one. But it seems to me that in the past week, there has been a lot more focus on the possibility, maybe the probability of recession coming, and that's going to slow profits, and it's going to slow them globally, and it's going to hurt stocks, and that we may go into an earnings recession before or contemporaneous to a real economic recession.
Well, there's no doubt that theme has been a lot more in focus. And I think the reason for it is what Jay Powell said last Friday, which was essentially that this Fed is not going to be particularly data dependent on how it looks at what it's bound to do on interest rates. So the point being, today's jobs number was reassuring. It was neither too hot nor too cold, but it also probably doesn't give any sort of excuse to a Federal Reserve that looks like it wants to get rates up to a certain level in a hurry and then see what happens, and is not particularly worried about the wear and tear along the way to the economy. I think think it's better to have an economy that we now see in this jobs report that's more resilient, that has a better labor market for, to withstand whatever the Fed's going to do. But you do have some bears out there and some people who will say, look, the lagged effects of the tightening we've already seen by the Fed and the fact that the globe is slowing down and China is where it is, it can tell you that maybe the U.S. is just by definition going to follow down that path from slowdown into recession. It's not a foregone conclusion, but clearly we have to worry about that as one of the probabilities.
Bob, you mentioned the shutdown of this Nord Stream, this gas pipeline. The cited reason is that because it was an oil leak. Do we believe that at all? I mean,
No.
Right, exactly. But I guess it doesn't matter. The pipeline is shut down, so who cares? But what we're seeing, and meantime, the G7 has agreed on some kind of price cap for Russian oil to the extent that that is enforceable. So what we're seeing here is the weaponization of energy, correct?
That's right. And this is part of the problem that we're trying to figure out. Just how much of this is a demand side problem where we're going into a slower global economy, therefore oil is going to be down. And in a sense, we want that because that's what the Fed wants. They want a slower economy. At the same time, there are supply issues that are impacting this. This makes this head-spinningly difficult to figure out on a daily basis. And you can see how oil stocks had been on an uptrend for several months already on the belief that eventually we were going to get our hands around the supply problem. And now it's moving to the downside again on concerns that the demand side this week going down, that the demand side is going to be a real problem. So the whole global commodity thing is really difficult to figure out. And we want commodities down because that supports the inflation is peaking narrative that would help the Federal Reserve, but it doesn't cooperate with us all the time because we've got this additional overlay of Russia-Ukraine on the after effects of COVID. This is just really difficult to figure out.
We're showing the charts right now that show energy, WTI crude up more than 1%. You had the RBOB up more than 4%. We've seen energy under pressure this week. In the meantime, you've got the NASDAQ down more than 1%, the Dow and the S&P down almost 1%. As we mentioned before, really reversing those earlier gains that we saw after the jobs report came out. Let's talk a little bit, Keith, about where investors should park their money right now if we're heading into a season of volatility.
Well, that's a very interesting question, right? And it comes back to what we talked about earlier. Don't do stupid stuff. This is not the time to be a hero. So if you're going to invest through this, and I would urge people to do that with the right perspective, this is where you go for the steady Eddie reliable stocks. This is where you go to Costco because people are going to try to make every dollar go further. This is where you go to something like GIS because people are still going to eat and they've got multi-billion-dollar brands on tap there. This is where you go to defense stocks because the world is a complicated place right now. These are all low beta, high dividend choices with long, extended histories of taking care of their shareholders. So, yeah, they're going to come under pressure, but I submit it's going to give you a far smoother ride and over time be far more profitable.
On General Mills, does it factor at all into your thesis that people may be making decisions about where they put their grocery money for the week and choosing other brands or even off-brand names rather than name brand General Mills?
That's a sharp question. And yes, it does factor into the decision, which is why we take that Costco on the other side of the equation. Because, you want to stick with those big names because those are always going to be there. They're household staples. But in the event people change how they buy, that's the Costco component of this. That's very much on our mind.
I know that you have a strong opinion about the chip situation that we've seen this week, NVIDIA and AMD dropping, especially because of some of the moves that we've seen with regards to China. Talk to me a little bit about how you're thinking about those two stocks.
Sure. I mean, the situation is this, right? We have created 90% or more of all the data in the history of humanity within the last few years. That genie is not going back in the bottle. So if you look at companies like NVIDIA, AMD, even Intel to some extent, it's logical that those are going to get pushed back now because those are highly leveraged stocks in terms of how the big traders hold them and use them. So a market pull down like this, to me, is something where I want to look at it and say, do I really want to nibble in? Do I want to go? The answer is yes, but you got to slow that down. You got to take a very pieced perspective. People are going to change the way they buy, but they're not going to give up their chips. They're not going to derail suddenly the digital process that is our lives. People are not giving up their iPhones, for example. You know, every single thing in our life increasingly has chips. And when that becomes a national strategic priority because of China and that stuff comes back to the United States, I submit that those things are going to come roaring out of the basement when people least expect it.
Keith Fitzgerald, thank you very much for joining us. We appreciate it. Bob Pisani, Mike Santoli, thank you guys.
Thank you.
The big issue hanging over the market.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.